Hello everyone, this is Miltos Savvidis, coming to you from Futex Live. Hello to all the Futex traders who are listening in, and to all our subscribers, and to everyone that's watching us on our YouTube channel. So, we're doing my weekly roadmap for the week starting the 1st of June, so it's already June, guys. Just bear that in mind. That's the 6th month of the year. 2015 is going by very, very quickly. But it's been a very eventful year so far, and on that note, we do actually have quite a few events this week. So, unfortunately, due to some unforeseen events, I haven't been able to, really prepare that much. I mean, I'm prepared, but I haven't really been able to make the best presentation here. I'll try and go through some of the main ones really quickly, but I don't have all the chart structures up. I'm going to be going through two of the markets that I trade, my main markets being the Eurostoxx 50 and the Bund Futures contracts. Um, Looking at some of those structures in there, there's some interesting things that I want to take a look at in there, and then we'll cover some of the data and central bank events, and then look at the risk and money management plan at the end. So, just to kick this off with a bit of a backdrop coming into the week, we haven't had much news from Greece, but that's also a bad thing because we were expecting, we're not expecting, but there was talk of a possible Greek deal this Sunday or by Sunday. So since we haven't had a deal, which is pretty much, I mean, in my view, very much expected. But then again, there could be some market participants that were trying to play for that. There could be some flow come Monday, so just bear that in mind. Obviously, late into Friday, and for most of Friday, really, we saw some general risk-off flows in some of the equity markets, and obviously in the core fixed income markets as well. So probably some of that is already priced in for the most part. But then just keep an eye on it because some of the structures are looking quite nice and juicy. So let's take a look at Monday. Come Monday, jam-packed with data. Just going to go through the main ones. We've got Chinese manufacturing PMI and non-manufacturing PMIs coming out early Monday morning at around 2 a.m. I think. Just keep an eye out on any of those PMIs because currently the PBOC are in a mode where they're waiting to do or waiting to act accordingly if they see more and more bad data. So just bear that in mind. Where we've seen some lackluster data coming out of China. They've acted. They've been cutting triple R's. They've been cutting their rates. So we do get some worse PMIs out of here. Okay, possibly we might get some reactions, some knee jerks to the downside, and the Asian equities or the Asian risk markets. But then again, watch out for those reversals. So come Monday, or come the days um, you know coming in after those PMI numbers, always take a look at what Asia is doing. How is the Hang Seng looking? How is the Shanghai Index? Um, how are these markets doing? How's the Nikkei looking? So what's Asia doing after some of these key numbers? Because that'll give you a hint as to whether they're possibly pricing in some sort of action or not. We've got a couple of more manufacturing PMIs out of China again, HSBC. That's a final reading, and then the German one, UK PMI manufacturing, and then a real big one is we've got the German CPI year on year, which is a preliminary number. Now, obviously, that gets drip fed through the day. So the first number I think we get out of Saxony, so it's region by region. We get sort of drip fed that number, and by 1 o'clock we actually get the full-blown figure, which is the average of all of them, I'm assuming. Um, but since we're drip fed that, obviously stay at your desk throughout the day. You're going to be getting these numbers, and the more and more numbers we get, the more we're converging to the actual figure. Now, what's interesting with this number, and what I think is quite interesting if you're trading the bunds, for example, is that personally, in my opinion, I think a large part of the sell-off that we saw in the bunds over the past month was probably due to some sort of repricing of inflation expectations. Now we saw oil, which has been on a very strong run since a few months ago. So it made its low at around $40. Now it's trading, up at the almost $60 handle. WTI I'm speaking of now. So we've got that strength in oil, so that could be feeding in to possibly any sort of reversal in deflationary fears. And then if there is some sort of pickup in inflation out of these CPI numbers, and then um, uh, from that we actually might get some sort of revision in inflation or inflation expectations out of the ECB that could drip feed that far, in which case, that could reprice some of your interest rate markets. So just bear that in mind. That could be a pretty interesting figure if we actually get a strong beat to the upside that could start confirming or at least building in expectation that in the medium term or the short to medium term we might start seeing an increase in those inflation numbers. So keep an eye on that number. I think that's going to be a pretty key one on Monday. We also have the US PCE core, so another inflation figure from the US. Keep an eye on that. It's going to be really, really important. Obviously, the Fed is in wait and see mode with regards to data. They will be acting if they see the required data. Or at least that's what they've told us. So, bear in mind these inflation figures are big. Well, U.S. personal income and manufacturing PMI on the same day, and then we have the U.S. ISM manufacturing, also a really big number. So watch out. The markets do tend to move quite a bit on ISM. One thing I've learned in my experience of trading ISM and the non-manufacturing figures of the ISM is they're not a particularly good figure to fade. They usually, when they're a big beat or a big miss, the market does tend to move quite significantly. So just bear that in mind. From a central bank policy perspective, we've got the Fed's Rosengren and Liikanen on Monday, so just keep an eye on those guys, see if they have any sort of commentary with regards to monetary policy. Now, I'm going to take a quick look at some of the market structures. These are the only market structures I'm going to go through for the Eurostoxx and the Bund, because I haven't had time to go through some of the other market structures, unfortunately. Hopefully, during the week, I'll be drip feeding some of that onto my Twitter. I usually do post between 2 or 3 charts a week, just little market structures, little breakout points, or interesting setups that I'm seeing in the market. So just bear that in mind. My handle's at MVS_FUTEXLive. Just watch out for that. But before I get there, let's go through my 2 main markets. So I'll take a look first at the Eurostoxx. On a daily structure, you will see the market has had a little bit of a sell-off on Friday. So we had that inside day formation on Thursday, which we left. It had a bit of a wick, but nonetheless it was an inside day, and we had a bit of a convergence in price here. So this low in here and that high in there, pretty nice little convergence of price in there. So when we did break out to the downside, we saw some good flow, some good volatility, and we broke back into this value area zone. Now, what I'm taking a look at on this daily structure is the fact that we've been converging up here. Obviously, we've had this this trend line, and you would have been looking something a little bit lower, but obviously now that's had to have been redrawn. And then we have this trend line support in here, which now, obviously, this was drawn a little bit lower, but I've readjusted that for that low of last week. So now we've got this little trend line, this perky looking trend line to be keeping an eye on. So if we do, for me, start offering below that, possibly we could see a decent little move down to these 35.14s nestled in here. So it seemed like a nice little pivot so far. Just keep an eye on that little level there. And then possibly back into these regions where the market actually truly has found really good support. Now these are the areas that are really key for me. When we get into these areas, the market seems like it just wants to head higher from there. So these are the key areas. In these areas, it's always been pretty much a chop, trend up, trend down, trend up, trend down. So quite difficult to ascertain anything from that. So just bear that in mind. You want to be looking for the true areas of support and resistance, and this so far has been holding as really good support. For me, once we get below that region and actually start closing with candle bodies that overlap these wicks, that's where it's starting to give me a signal that possibly these bulls are going to have to pay for this party. So just bear that in mind. Obviously, any moves closing back above these 36.11s just nestled in here, I'm looking possibility of this, rotating, a lot higher back into this zone. So that's the way daily structure is looking right now. But if we take a look at the weekly market profile, sorry, my voice is breaking up. It's quite late at night. But this is looking particularly interesting from a market structure perspective. Let's just take a look at the way this closed last week. We closed last week below these 35.80s, which was that weekly value area high of this week, from which we broke, we tested here, and then took off to the upside, where we posted this week 2 weeks ago. And consequently, the next week we came in, and I remember a number of us came in and said, all right, well, if we start making our way to the downside, holding below these 32s, we're probably going to look to fill in this very big void. We left a very, very big volume vacuum zone, which we pretty much filled here. But for me, I'm taking a look at this now and saying, okay, well, we did fill a lot of that in here, but just to the downside here, we still left quite a bit, I think, untraded for an area where, previously we did do a lot of business. So I think there is potential for this market to come and auction this area out. But for me, it seems the very obvious, very standout place to be looking is these 3605s slash 3606s, which was a pretty distinct little area on this week in here, just short of that inside week high at 11s. And plus, it's the weekly value area low of last week, and we also have a lot of TPOs there, like a lot of big ledges. A 3 TPO ledge here, and a 5 TPO ledge just above that at 06s. So just bear that in mind. There's a nice structure in here. There's a nice little ceiling in the market here, which I'll be very keen to look at when we get here. So if we do get here, which it's a very high possibility. We've got that little LVN just ahead of it, so low volume node just in there, and then we've got that really key little ceiling in there. So obviously for me, I'm thinking, okay, well, if we can hold below here, and we'll look to trade this out, and then effectively if we can actually hold below these 80s, we could effectively just start rotating and filling in this, area, this value area zone, which we spent a very large part of May in. So just bear that in mind. This is the way the structure is looking at. Obviously, that's a scenario where I'm looking at for this market to rotate to the downside and possibly test these 14s just nestled in here, and obviously possibly these very key O1s, double O's areas, very, very low volume traded here. So just bear that in mind. If we do get down here, it could be a very decent first time buy. And then that weekly low there at 81s. But the scenario to the upside is obviously with our pivot, resting at 05s. If we get above these 05s, 06s, there is a lot of scope for this to rotate right back up into here and test that key value area high at 63s, which it seems like that area has been quite a key little area. Just bear that in mind. Get up to there. That could be a decent little sell back into here, and obviously you want to be taking a look at this very low volume node here at 69. So that's a really key little area. If we do pop up through here, test here, can't hold a bid through that, and just roll back down in here, that could be a really decent little trade setup for you guys to be taking. So that's the way the Eurostoxx is looking for this week. The Bund is also looking quite interesting for me. So I was talking about this with a few traders on the floor, and it seemed to me, the general consensus, obviously, we did break above this really key area, and for some reason, it just is not feeling right to me. I don't know how else to put this, because we had this really big vacuum zone, so very little traded in here. And we broke above it, and it seemed like there was just a lot of funky trading going on here. It just didn't feel like the break I was looking for, as opposed to some of these breaks. We saw massive volume, a lot of volatility to the upside, a lot of volatility, a lot of volume. We broke this really key area, this really key high in here, which was a very big 38.2% fib, and look at the trade we did in here. It was just, for me, it just doesn't feel right. I could be wrong, but I do feel as if this trend line, this one I've drawn in here, because we've been kind of holding up the market in this trend since pretty much, not mid, it's probably latter end of May, but we've been holding that for quite a few, couple of weeks now. So bear that in mind. And we've had this trend line, hold for quite a while now. If we do actually break that and hold below that, close below it, it could be some decent rotation to the downside, and I'm looking at some key areas to see where we might get some trigger points. Now, the first area, obviously the first area I'm looking out for support is these 55.42s. So it's a very key little swing low in here. We went through, it was a value area low, 50% and initial balance low. There was a couple of really key areas. We did hold there briefly, and we popped through there. We think we went to like 47s. Yes, it was 47s. So, I'm looking for that area to see if we get any sort of initial support. But below that, I think the key area next to be looking at is these 15s. These 15s to 17s area seems like a pretty key pivot point. We've got a lot of key resistance there and a lot of support that obviously built once we opened up with that really strange gap on Friday. So these are the first initial port of calls, and then to the downside, I'm seeing a bit of a pivot around these 84s. Now it looks like we've gone through here quite aggressively and then come through it quite aggressively, but I also feel that some of these levels where it's shown you that it's a pivot in here, a bit of a pivot in here, and then again a few lows in there, and then it's shown you that when it's gone through it really quickly, and then gone through it again really quickly. It can actually be an area that the market's paying attention to, sort of like the tipping point. So those 84s are just ahead of those 77s, which obviously that's an obvious level. That's the inside week high. So that's just could be a bit of a premature level. But then again, if we're getting down to these levels, which is below these, 96 to 03 levels, that could be really dangerous. That could be a move. That could be, could open up the way for a really decent move to the downside. And the reason I'm saying this is because we've been moving up on just very, very light volume, and it's not what I like to see if I'm thinking this market does have a good chance of moving to the upside, and I just haven't seen that kind of initiative yet. Mind you, and I don't want to be selling this this bearishness too much, but we have this 50% that comes in at these 156, 07s, 06s. I've got 07s here, but I think it could be 06s for some other people. So just bear that in mind. 06s, 07s. We've got 50% of the move from the high to this swing low here, down at 151.44s. So we've got that level. We also have these 87s potentially, that very key swing low that came in back in March. So bear that in mind. 87s, keep that in the back of your head. Now we're going to look at the profile and see how that plays out. Now, obviously, if we do start breaking above these levels, then I'm thinking in terms of, possibly there's a change in the sentiment in the market, and then we could start rotating to some of these higher volume nodes that are nestled, the upper end of the 156s. We've got this high volume node here, which comes in at 156.74. So there's potential if we do start break above here, we could start just seeing a rotation back into these higher volume nodes, or higher volume traded areas. So that's what the structure's kind of looking like on a 60-minute chart. Now, if I take a look at the market profile for you guys on a weekly basis, you'll see, obviously I did mark out those port of calls that I did note. These 42s just nestled in here. I didn't put the 15s because it seems as if we've got the weekly value area high comes in at 13. So 15s to 13s I'm looking at as very, very key, because the weekly value area high comes in at 13s. Now, if we can hold above those 13s, well, then there is scope for this market to just auction above it, find value above it. Whether we, find value above this high, that's yet to be seen. With the current volume of volatility, I'm not seeing it happen. But for me, as long as we're above these 13s, we're going to be at least trying to seek value higher. So that's the hypothesis for a move to the upside. Obviously, a very key line in the sand. Once we start breaking back below these areas, I don't. That's the thing, because it's a funny one. We do have a lot of key support levels, although we are back into value. So it's gonna be very discretionary. It's gonna be a lot to do with how you see the price action playing out. So if the price action seems to you that the offer is not really genuine, then I'd say, okay, why not? Why not try this weekly VPOC at 93s, or possibly these 87s, which is just above those 85s we just spoke about, which is the 50% of last week, potentially, or even these 77s. So I do see the market potentially stopping these areas, but if I'm seeing that the market's built, let's say, um, over Monday and Tuesday, for example, we've built a pretty nice structure outside of value, but it hasn't actually trended higher. This is just a scenario now. We've built a pretty nice structure, pretty fat-bellied structure above this value area high. We're not quite trending to the upside, so we're not building any tails here. We're just sitting on top of it, and then we just break back inside here. I don't want to stand in the way of that, because if there's good volume to the downside, because all of these longs, these weak longs, have to give way, I think the market could see a really quick and swift rotation back down to the other side of value. Now that could be a really vicious move. So you just got to bear in mind what the context of it is. Now if we come in early Monday, early doors, Monday, Tuesday, and we just trickle down, and then find support, that's a different story. But if we've already built a lot of value, that could be a hypothesis of why these levels might not actually work as as well as we would think. I think they would be good for a few ticks, but just bear it in mind. If there's really good volume and it's really pushing, especially if it breaks that really key trend line support that I showed you guys, do you really want to be standing in the way if it's really moving? We've seen the Bund when it comes off, how vicious it can be. I'm not implying that it could have a massive move in here, but just bear it in mind. It could be something. It could be something cooking, something in the works here. So let's just say we do make our way to the downside. Obviously, we have our key value area low here at 45s, and then we do get down to the 2 weeks ago value area high at 18s, which seemed to have a really key impact on the Monday morning. Once we had gotten through that level, the market started to charge. So bear that in mind. We have a really key VPOC here at 154 double O's. And then we had a little swing or crossover value area high and low at 94. So just bear those little levels in mind. They could be interesting if we do get down there next week. So that's what we're looking like in the Eurostoxx and the Bund. If we take a really quick look over at what Tuesday and the rest of the week is looking like, we've got German unemployment change with the European CPI estimate. So that is the European CPI for obviously the whole of the Eurozone. Obviously Germany's is going to be coming out on Monday, which is most important. We've got central bank, the Reserve Bank of Australia, the RBA, that's having its interest rate decision and media release. So just bear that in mind. We did see a rate cut out of them last month, and last month they did remove their easing bias. So it could be interesting to see if they continue with that tone. If they continue with that tone, that they're not necessarily keeping that easing bias on, then we could possibly see some strength in the Aussie dollar. On the contrary, if they start coming back with a heavy easing bias, or they cut rates, obviously that could be quite unexpected. You expect the Aussie dollar to suffer. We also have the ECB's Visco speaking on Tuesday, so just look out for any comments out of him. Wednesday, we've got the HSBC China Services PMI, Eurozone PMIs, and UK PMIs. We also have that's the Eurozone retail sales, not the US one, so not as important. Market doesn't necessarily move that much off of this, but I put it in there anyway. And the US ADP employment, which is a kind of a precursor for NFP. From a central bank policy perspective, we got the BOJ Shirai making a speech. So watch out if there's any sort of comments. Now we've seen the yen start to charge to the downside, or should I say the dollar yen charging to the upside quite strongly. So if we do see any sort of easing comments there, that's going to add more fuel to that fire. So bear that in mind. We've got the ECB coming out on Wednesday, which is no further actions expected. But what I'm going to be looking at specifically is any further comments on this ECB front loading of purchases. Obviously, the ECB's core came out last month, and they basically told us, look, we're looking to front load our purchases in the summer month and in these months ahead, because there's going to be low liquidity in the summer. In which case, we did see a pretty big reaction. The Bund, moved a lot higher. Obviously, that was within the context of an inside daybreak, but obviously that was a pretty big comment. It doesn't necessarily mean they're going to buy more bonds. It's just they're just going to buy more in the short term. So it's a pretty interesting dynamic there because eventually the Bund did actually close quite weak on the day, but it could just be on the initial reaction. It's just um, yeah, a short supply with high demand in the short term, so it just is a big knee-jerk reaction. So I'm interested to see if we get any further comments or that. Maybe he still leaves the door open for further front loading, in which case, do we see another big move in the bunds to the upside, or do we get a blip up to the upside and then the bunds have realized, well, it's not really a comment that's going to have any sort of continuation and it gets faded. Build that into your scenario. It could be something that could come out. Obviously, we've got the staff macroeconomic projections of inflation and growth. So I think any possibility or probability that they have an upward revision in inflation expectations could jitter the markets quite a bit. The ECB has basically just been downgrading their inflation expectations, which is why they're doing QE. But if we actually get a revision to the upside, that's higher than expected, or if there is a revision that's within a region that's acceptable, okay, we might get a bit of a move. But if it's something that's higher than expected, then maybe the market might get a little bit jittery. Maybe we see the bunds have a really, really big offer on that because, what's the ECB trying to tell us with this? Are we moving closer to inflation than we expect? Just build that into your plan. That could be something interesting come Wednesday. We also have the Fed speaker Evans. He's a voter and a dove speaking on Wednesday. Come Thursday, no data points, but a lot of central bank speakers. But do bear in mind it's Corpus Christi Day. It's a public holiday for Austria, Portugal, Switzerland, and parts of Germany and Spain. Um, you know, the slightest, even the slightest excuse for the market to be dead, I think it's going to be dead. So just really, really be careful trading these holidays in the summer. They could kill you. I mean, it could be great, but I think maybe budget in a little less risk capital for Thursday. So from a BOJ, central bank policy perspective, we've got the BOJ's Kuroda speaking at the BOJ's international conference. We've got Harada also speaking or giving an interview, and we've got the BOE's Monetary Policy Committee meeting and announcement, so their rate decision on Thursday. Not expecting anything out of the BOE there, but if we do get any sort of statement uh, that indicates that we're possibly looking at a rate hike sooner than we're expecting, which is highly unlikely with the current backdrop of inflation. Inflation is literally the lowest it's been in decades. So I really doubt there's anything there. But we did see through the minutes that there was a bit of a 50-50 on those two votes voting for a rate hike. So then again, you just never know what might come out of that. So just be prepared for that. ECB's Liikanen also speaking. The ECB's Mersch speaking twice, I think, on Thursday. And then ECB's Not and the Fed's Tarullo also speaking on Thursday. So really jam-packed with central bank speakers. So I'd say, for this week, definitely look back on what some of these central bank speakers have said, what their stance is, and if they change their stance on something, how is that going to affect the market you're trading? Come Friday, we've got a big figure out of the U.S. We've got the U.S. non-farm payrolls, the NFP, and obviously looking at not only the NFP, but we're also looking at the average hourly earnings, which the average hourly earnings, pretty much have been expected at 0.2% every month. I'm going to take a look what they're expecting this month. I haven't checked, but do bear in mind that I think the average hourly earnings is probably more important on a continuation type move. The non-farm payrolls number, I think it's somewhat lost its from a year or 2 years ago. Definitely 2 years ago was a very big number. I think everyone's moving a lot more into inflation. We do see a lot of volatility, so definitely play the volatility, trade it, scalp it. there's a lot of opportunity on non-farm payrolls. I think if you're prepared for it, you can make a lot of money. But I think if we're going to get any sort of continuation type moves, definitely be looking at those average hourly earnings. Um, you know, any massive beats or any big misses could see, um, a big move down or a big move up in the bunds respectively. So, or in your equity markets as well, you could see, um, initially a move up in the equities on a big average hourly earnings because, the economy is doing a lot better, but that could also be seen as, oh, well, we could be hiking rates. And if we're seeing the euro dollars, so the euro dollar strip start offering quite heavily, well, then there could be some pricing in of a rate hike sooner than expected. So how do you fit that into your plan? We also have on Friday the Canadian unemployment, so just keep an eye on that number. Anyone trading the CAD, and then the Fed's Dudley, who's a voter and a dove, and he loves to speak up a lot of games, so be aware of that. So my risk and money management plan for this week. Monday, I'm putting about 20% of my risk allocation, even though I don't trade. I don't like to put too much risk allocation on Monday. I think it's a very, very busy day. We could get some flows out of Greece, so watching that in the morning. So I think, with 12 adventure and risks all in all, some of them were really high relevance. I'm going to put about 20% on that. Tuesday, we don't have that much data, that much going on. Medium relevance, I'm putting about 15% of that. I'm waiting really for Wednesday, where I'm seeing the ECB and a lot of other data points. So I'm putting about 30% of my risk there. On Thursday, I really want to be, dumbing that, or just closing in on my risk, really tightening that up 10%. It's a holiday in some of those countries. We could see some low volume. I'm not really keen on trading too much because I'm a momentum type trader. If there's not a lot of volume in the market, I suffer from that. So I'm going to put a little less risk on that day. And then Friday, we've got 4 venture and risks, very high relevance. I'm putting about 25% of my risk capital on that day. So that's my risk and money management plan for the week. Those are overall the venture and risk. I'm sorry I didn't have some more charts to show you guys, but I really didn't have enough time to go through all that that preparation for a presentation. I did show you guys my 2 main markets. So hopefully you did see a little bit of how I'm looking into this week. Other than that, good luck for this week for the grads at the firm and for anyone that's subscribed to FuTech Live. I will be doing the debriefs from Monday to Friday throughout the week. So the afternoon debriefs will be by myself. Brannigan is away for this week, and I will potentially be doing the week after as well. So listen in. My format's going to be probably a lot different to Brannigan's. Obviously, I won't have a board to just sit up and explain it to you guys, but I'll try and go through some of my thinking and some of my thought processes on how I do some of my trades, and maybe move into a really smaller time scale instead of going on such a bigger time scale. I usually go through very, very, very big time scales on my weekly roadmaps and my wrap-ups. Or maybe I'll try and hone into a lot more of the smaller time scales and show you guys, a train of thought on a more of a 1 minute or a 5 minute chart, and how let's say me or some of the other traders in the London office are positioning ourselves for some of these opportunities. Okay, great. Well, thanks for listening, guys. Good luck for the rest of the week, and hope you guys have a good one. Take care. Bye-bye.